What's up guys, this is Danny from Rethink Peer-to-Peer Lending. Welcome back to yet another portfolio update on my channel. In today's video, I will provide you with a quick update on my current portfolio developments, as well as discuss the most recent events that have happened on a number of platforms. Overall, my peer-to-peer portfolio generated a total income of 569 euros in July, which is the second highest number this year. The only platform to achieve a new personal best income last month has been Income Marketplace with a total of 67 euros. The best performance in my portfolio is still coming from PeerBerry with around 13%, followed by Income Marketplace with 11.5% and Invest with 11.2%. Due to the many defaults on Estate Guru, my overall performance has now slipped to 7.1%, while the Red Lantern remains at Bondora Portfolio Pro with 1.95%. In the previous month, I had a total of 5 transactions in my portfolio. I withdrew 2,000 euros from Bondora Go and Grow, where I will liquidate my position due to the continued lack of transparency, as well as 1,000 euros from Bondora Portfolio Pro, where I was recently able to sell some loans with a larger discount on the secondary market. On the other hand, I deposited 1,000 euros each on PeerBerry, Esketit and Income Marketplace. My outstanding peer-to-peer portfolio has now increased to 67,953 euros in the last month. By the end of the year, I want to at least beat my personal highest portfolio amount of 80,715 euros from January 2020. Next up, let's have a look at the most important developments that have happened on a number of platforms in my portfolio. PeerBerry remains the undisputed number one in my portfolio, as the outstanding investment amount is now at just under 24,000 euros, while the overall performance is around 13%. In July, 67.5 million euros were financed through the marketplace, which is the highest number since February 2022. This leaves PeerBerry only 6.5 million euro short of beating its own monthly record from December 2021. To get to this point, it will only be a matter of time should the repayments of war-affected loans continue in this fashion. According to the repayment history so far, the remaining 7.2 million euros should be repaid by the end of this year. Also, Esketit has shown some impressive figures in the previous month. In July, 27.7 million euros were financed through the platform, elevating the platform's outstanding portfolio size to just over 30 million euros for the first time. As long as the demand on Esketit remains this high and there are more lenders added in the future as well, I personally don't see any reason why the growth of Esketit shouldn't continue. Personally, I have deposited at least 1,000 euros for the 9th month in a row, so my investment portfolio on Esketit has now grown to 14,688 euros with a total return of 10.76%. Next up, we look at Income Marketplace, a platform that is surely having a very busy summer due to its increasing issues. We can only see small repayments coming back from Brazilian lender ClickCash. We can observe some unusually delayed buybacks at Danarupia and Juancho Te Presta. We have some adjustments in the investment structure of Vivos, which further fuels the already smaller loan supply, and there are no new lenders in sight to facilitate investors' demand. Most recently, there has also been a problem with the allocation of funds transferred by Vivos to the marketplace, which led to temporary negative balances on some investors' accounts. Looking at those issues in isolation, they may not be as crucial, but adding all of them up, one might raise the question how the marketplace will deal with such challenges should the portfolio really reach a level of maybe 50, 70 or even 100 million euros. Although I personally believe that investors should always have a certain amount of patience and understanding, especially since the platform tries to have a very open and transparent line of communication, Income should aim to fix those issues as soon as possible if they don't want to risk their foundation for further growth. The first effects of the shorter loan supply can already be seen in the managed portfolio size, which recently fell below 11 million euros. Also, my personal portfolio on income is now affected with a cash drag of more than 3,000 euros. And if the situation does not improve in the next few weeks, I will withdraw a part of my investments and, if necessary, reallocate it elsewhere. Next up is the Lithuanian PeerBerry spin-off Crowdpear, a platform that is now regulated under the new European crowdfunding regulation. This license should make it easier for the platform to offer its services throughout the European Union. However, the platform pointed out that it will continue to focus on the Lithuanian market in the coming months. The main arguments have been the better data availability for risk assessment, as well as the overall economic situation. The track record of Crowdpear looks quite stable so far. More than 3,300 investors have already registered on the platform while financing 1.8 million euros in real estate loans. My impressions of Crowdpear have been very positive so far, and due to the increasing number of new loans on the primary market, I deposited another 1,000 euros at the beginning of August, thus expanding my test investment to over 2,000 euros. Another platform that has recently obtained the European crowdfunding service provider license is HeavyFinance from Lithuania, a platform that recently published its annual report for 2022. The loss of the company has doubled to about 1.1 million euros last year, while at the same time also the revenue doubled to 1.36 million euros. The auditor pointed out some uncertainty about the company's ability to continue as a going concern, since current liabilities exceed current assets by about 72,000 euros with an equity balance of only 58,000 euros. This seems like a valid point, although it's not unusual for venture-backed companies, since they don't tend to aim for short-term profitability. So in this regard, I don't see any major issue, also because the platform has been receiving a seed financing round of 3 million euros earlier this year. And lastly, we also talk about Twino, a platform that has recently launched a new investment product where investors can invest in rental properties. The difference to the other real estate projects on Twino is that investors do not lend money for the development of a property, but they acquire ownership rights to the specific asset. The profit is therefore not received in form of a typical interest payment, but in the form of an annual dividend payout. The expected return is between 6 and 8% per year. However, Twino offers a very compelling 5% cashback bonus for its first projects to get the new product off the ground. For me personally, I don't like it when platforms mix up their portfolio with real estate projects, especially when they have a historically grown background of funding unsecured short-term consumer loans, so I personally will keep my hands off of it. Let me know in the comments if you found this video helpful for your peer-to-peer investments, and if you want to receive more content like this, please consider subscribing or head over to my blog where you can find further analysis on different peer-to-peer platforms.